Look, I need to tell you something that Wall Street banks have been quietly doing for the past 18 months while telling you to be careful with crypto. Here's what's actually happening. While the average person is still asking, should I buy Bitcoin? Institutions have been accumulating at a pace we've never seen before. And there's a very specific reason they're doing this now, before Bitcoin hits 150K. By the end of this video, you'll understand exactly what they know that you don't. Let's get into it. So here's the thing. You've probably seen Bitcoin hit new all-time highs. Maybe you own some, maybe you don't. But either way, you're thinking, didn't I miss it? Isn't it too expensive now? I get it. When Bitcoin was $500, people said it was too expensive. At $5,000, too expensive. At $50,000, you see where I'm going with this. But here's what's different this time. And I mean actually different, not the usual crypto hype. In 2024 alone, Bitcoin ETFs absorbed over $30 billion in new capital. That's institutional money. BlackRock's Bitcoin ETF became the fastest ETF to reach $10 billion in assets in history. We're talking about the same BlackRock that manages $10 trillion. Now, why would the world's largest asset manager be this aggressive with Bitcoin? Look, let me show you something that Wall Street doesn't want plastered everywhere. Right now, only about 0.5% of global wealth is in Bitcoin. That's roughly $700 billion out of $140 trillion in total wealth. Now, if Bitcoin just reaches the same allocation as gold, which sits around 3 to 4% of global wealth, we're looking at a Bitcoin price between $500K and $700K per coin. But here's the secret. Wall Street isn't waiting for that to happen. They're positioning now. You know what's crazy? A recent survey showed that 94% of financial advisors plan to allocate to Bitcoin within the next 2 years. 94%. These are the same people who called it rat poison 5 years ago. So what changed? Here's the math that flipped everything. The US government prints about $2 trillion in new dollars every year through deficit spending. Meanwhile, only 900 Bitcoin are created per day. That's about $40 million worth at today's prices. Do that math with me real quick. $2 trillion in new dollars versus $14.6 billion in new Bitcoin annually. That's a 137 to 1 ratio. Now you might be thinking, okay, but Bitcoin is volatile. It crashed before, it'll crash again. And you're right, it probably will. But here's what institutions figured out that retail investors miss. They don't care about the volatility over months. They care about the trajectory over decades. Think about it like this. Imagine you're filling a bathtub, but there's a small hole at the bottom. Sometimes water drains fast, sometimes slow. That's Bitcoin's volatility. But here's the thing. The faucet keeps running, and the drain hole never gets bigger. In fact, with Bitcoin, every 4 years, that faucet gets turned down by half. The last halving happened in April 2024. What most people don't realize is this. We're currently in the 12 to 18-month window after a halving, where Bitcoin has historically made its largest moves. In 2013, it went from $13 to $1,100. In 2017, from $600 to $20,000. In 2021, from $7,000 to $69,000. Notice a pattern? Each cycle, the gains get smaller in percentage terms, but massive in dollar terms. Here's what Wall Street knows that they're not shouting from the rooftops. The 150K target isn't even the exciting part. MicroStrategy, a publicly traded company, has been buying Bitcoin non-stop and is now sitting on over $20 billion worth. Their stock has outperformed almost every tech stock because of it. That's not speculation. That's their actual treasury strategy. And get this, several nation-states are now looking at Bitcoin as a strategic reserve asset. El Salvador was just the beginning. The conversation has shifted from if to how much and how fast. So here's my point. You don't need to go all in on Bitcoin, but understanding this shift from retail speculation to institutional adoption, that's the difference between watching from the sidelines and actually building wealth. The 150K secret, it's not about the price. It's about the realization that the largest pools of capital in the world have decided Bitcoin is not going away. What you do with that information, that's up to you. If this changed how you think about Bitcoin, hit that subscribe button and drop a comment. Are you positioned for this shift or still sitting on the fence? See you in the next one.